Wealth and Innovation, Discovering the Investment Choices of the Affluent. Financially savvy individuals understand that preserving and investing money are distinct investment strategies. The purpose of preserving money is to safeguard hard-earned capital from various external risks. At the very least, it aims to protect assets for future generations without losing their value. Ideally, it aims to grow assets. On the other hand, the goal of investing money is to spend it wisely, benefiting oneself, society, and the world at large. If these investments yield profits, that's excellent. However, if they turn out to be less promising, it's not a big concern as long as it's not the last of one's savings. There is a certain logic to investing money. When a person has fully met their basic life needs, new priorities emerge: the need for respect, a sense of significance, the desire for creation, aesthetics, beauty, and self-development. This is inherent in human nature, following the evolutionary laws of development. Let's explore where wealthy individuals invest their extra funds. 1. Investing in spare passports and residency permits. Surprisingly, obtaining additional citizenship or a residency permit can serve both as a means of preserving and multiplying wealth, as well as a monetary investment. The distinction lies in the following. If a foreign investor purchases a mini hotel in Montenegro and, based on this investment, obtains residency status, previously even economic citizenship was available until 2022, along with the ability to open euro-denominated bank accounts, register businesses, and generate income, this is considered wealth preservation. On the other hand, if an individual applies for an investment passport in Grenada by making a non-refundable contribution to the country's government funds, this is considered a monetary investment. This is particularly true if the sole purpose of seeking new citizenship is mobility, such as visa-free access to the United Kingdom, as a precautionary measure, or having a backup plan. The investor consciously makes a non-refundable contribution to the country's economy, genuinely pleased to have contributed to their new homeland, and gaining more opportunities and freedom at a reasonable cost. As we can see, a new legal bond with a country can be seen both as an investment and wealth preservation. It all depends on the investor's goals, priorities, plans, motivation, and personal circumstances. 2. Investing in entrepreneurs and startups. A significant portion of innovative projects are launched and developed through venture capital. Affluent individuals often invest in startups as independent business angels or participate in crowdfunding platforms. Other participants in the investment market, such as seed investment funds, business accelerators, and venture capital firms, professionally finance startups. Investors choose which directions to invest in. Some believe it's right to support startups in the field of biotech. Others have faith in fintech projects. Some prefer to fund edtech startups. Others see potential in the food tech industry. There are also emerging segments like proptech, real estate plus technology, legal tech, law plus technology, retail plus technology, green technologies, and others. Experienced players in the venture market advise novice business angels to invest no more than 5% of their available capital in startups. They also recommend joining forces with other investors and allocating no more than $15,000 to $20,000 to a single project. Following these recommendations ensures that investments are as secure as possible, since investing in startups carries the highest level of risk. According to research conducted by Harvard Business School, 75% of startups in the United States do not deliver a return on investment, meaning they fail to generate profits. In the best-case scenario, the outcome is worse than expected, while the rest of the projects simply go bankrupt. If innovative startups are such high-risk investments with minimal chances of success, why finance such projects? The reason lies in the desire to create a new future and the pursuit of new experiences. After all, if Chinese investor Neil Shen hadn't once believed in the idea behind ByteDance, the world's most popular social media platform TikTok may not have existed. 3. In renewable energy sources, freedom and independence are key values for wealthy individuals, and they are willing to spend money on them. Energy autonomy through alternative sources is a good option for investing money, especially in countries where traditional energy resources need to be imported. Even if you live in a rich resource region, having a backup plan is beneficial, as the ability to generate your own energy offers several advantages. Reducing dependence on resources controlled by the government. Continuous access to electricity and heat, even during critical situations such as power line outages due to severe weather conditions, extended repair works, or disruptions in traditional energy sources due to emergencies in the region. The ability to build a structure anywhere without worrying about the cost of connecting to traditional utilities, example, a countryside home, a farm, or any other property for those who prefer a life away from civilization. The potential for additional income in the future by selling excess generated energy to resource companies. Of course, renewable energy sources cannot completely replace traditional resources, but in European countries, having a wind generator or solar panels as a backup in a private residence is becoming the norm. The desire to use green solutions is not necessarily tied to high environmental awareness, rather, it is a pursuit of independence and a desire to be involved in innovations. 4. In surrounding infrastructure projects, one important personal quality of affluent individuals is their ability to think on a large scale. This means they have a broader perspective that goes beyond business opportunities and encompasses the world around them. For wealthy people, a home is not limited to the walls of a private residence. They consider the public space as their own, in a positive sense, and show care by investing money to improve the quality of life for their neighbors. Individuals with moderate incomes may take care of their street, neighborhood, or city by personally funding repairs in their building's entrance, paving the road near their house, or building a playground. However, mega-philanthropists with significant capital have many more opportunities to enhance cities. Some notable examples include: the renowned Tretiakov Gallery in Moscow was built in the early 20th century with private funds from the Tretiakov brothers, Pavel and Sergei. Billionaire Sergei Galitsky financed the construction of a stadium and city park in Krasnodar, Russia. French billionaire François Pinault restored the Grain Exchange building in Paris to open a private museum accessible to everyone. Bernard Arnault, the president of LVMH, built the Fondation Louis Vuitton from scratch in 2014, creating a new landmark for Parisians and visitors to the city. Bernard Marcus, the co-founder of Home Depot, opened the largest public aquarium in the United States in Atlanta, Georgia. Thanks to the contributions of ultra-wealthy individuals, hospitals, medical centers, libraries, educational institutions, theaters, and iconic religious structures are being built worldwide. While urban infrastructure and public buildings are primarily the responsibility of the state, benefactors often take initiative instead of waiting for limited government funds to allocate resources for improving cities or towns. Through such altruism, patrons attempt to demonstrate their ambitions, cultural level, and bring benefit to as many people as possible, seeing their own happiness in these acts of philanthropy. However, practical motives are partially concealed behind noble intentions, as in many countries, companies and individuals can optimize their taxes through charitable donations. These are not all the options for where one can invest significant amounts of money, as there are millions of possibilities for expenditures of various scales worldwide. What matters is the guiding principles that wealthy individuals follow when cutting a slice from their pie. They invest less than they earn. It is important for them to preserve their assets not only in valuable and profitable acquisitions, but also in liquid formats. Wealthy individuals have a knack for investing in two key areas: renewable energy sources and community infrastructure projects. They value their freedom and independence, which is why they choose to put their money into alternative energy sources. This not only reduces their reliance on government-controlled resources, but also ensures a constant supply of electricity and heat, even during emergencies. It's a smart move that offers financial benefits as well. But the rich don't stop at personal gains. They think big and invest in their communities too. We've seen some amazing examples of wealthy individuals funding the construction and restoration of public institutions like galleries, stadiums, museums, and more. They want to make a lasting impact and leave a legacy that improves the quality of life for everyone. So, in a nutshell, wealthy investors are all about strategic spending. They balance profitability with liquidity and invest in things that align with their values of freedom, independence, and personal growth. It's truly inspiring. If you found this video informative and eye-opening, be sure to hit that subscribe button and join our channel at AI_investments. Don't forget to give this video a thumbs up and share it with others who might find it interesting. We've got lots more content coming your way on finance, lifestyle, and current trends. Thanks for watching, and we'll see you in the next video. Stay tuned and keep those investments growing.